Well, good evening, everyone. Welcome back to the channel. So, as they say, when something works, keep doing it. So, I have to say, the last video I did about retiring with $1 million in SVOL has done incredibly. In fact, I've never seen results like this as a YouTuber. So, I'm going to keep on. This is going to become a series now. So, the next logical fund to talk about is JEPI, since I've already done these on JEPQ and SVOL. So it's going to be a very similar format to what I just discussed yesterday. And let's go into that now. I have a spreadsheet prepared here. So I'm going to share the screen here. And thank you all for watching that video. I'm really humbled by the results and hope we can keep this going. So, okay, very similar to what we discussed yesterday with SVOL. We're taking the JEPI ETF and same scenario. Say you saved up $1 million from working or however long it took you, 10 years, 20 years. Say you saved up $1 million, you're ready to retire, and you're deciding, okay, you know what? I see this really awesome dividend in this JEPI fund. I'm going to dump $1 million into it. And this is how many shares you would come up with at the current price that it's trading at. And the dividends that it's paid over the last year or so adds up to about $6.23. Now, again, I factored in 53.89, which is actually the price that it's at in the after hours trading. It was 53.85 as of close of market February 24th, which was down about 41 cents. So I'm factoring in what it's probably going to open at, 53.89. So you can see it's trading a lot higher than the SVOL, which we discussed yesterday, because you would have more than double the shares with the SVOL if you did this. But the thing is, the dividend that it's paying adds up to almost double what the SVOL is paying. And I actually have here, because I came a bit more prepared today, I've got the last trailing 12-month dividends. So you can see as of February 1st, it just paid out 44 cents. It was 61 cents in December, 60 cents, 48 cents, 55 cents, and so on. You can see for the last 12 months here. So these 12 months add up to about $6.23. If you see here, I've got months 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, see, 12 of them there. Adds up to, it's about 50 cents a month, really. If you think about it, it's a low of about 44 cents and a high of about 62 cents. So taking that, it's about 52 cents a month. So with that, let me do another one here, because I've got your annual payout with 18,556 shares. Your annual payout would be $115,000, which is a really comfortable salary. When you're retired and hopefully have everything paid off, you really don't even need to make that much. You could probably live on half of that. Not quite as good as what you would get on the SVOL, but still very, very enticing. Now, this this cell here is the total cumulative dividends that the fund has ever paid out. So this fund has been around since 2020, and the dividends have actually been going up since then. You can see all the way back. I put it together from July 1st, 2020 was the first dividend that this fund ever paid out. It paid almost 50 cents. Then August of that year, it paid 29 cents. And back to the mid 40s, then 50 cents, 26 cents, and 2021. So you see there's some fluctuation here going all the way through 2021. And then 2022, we've had a high of 62 cents and a low of 44 cents. So let me I'm going to add a third column here. If it's, say, 52 cents, and then we'll center that. Because the idea is, so this is the average over the last year. It's 52. So you would make 9,649 per month. Center that, make it money, since that's what we're talking about. And then we would take this times 12. So it's about the same, as you can see. So the average, we're not much further above the average right now, but we're a little higher. So, well, actually, this would be like $100 or $149 more than what we're at here with the 623. The 564 that you see here, this I took this based on cell C25, which is up here, and because the fund's been around for about 2.5 years, I actually did 5 months divided by 12, came up with 0.4167 because I'm crazy like that, instead of 2.5. So that's what it would be, slightly below what it's paying per year at $6.23. So these three scenarios, if it was always 62 cents, you'd have 11,504. So you'd get about $23,000 raise, which would be nice. Should be icing on the cake since you're already going to be living on 115,000 in that case. Let's see how we're doing over here. 2 live viewers. Feel free to comment if you want. I'll eventually figure out how to put the comments on the screen like I see other live streams do. So, okay, 138,000, that would be your best case scenario. Worst case scenario, let's base it on 44 cents because that was the lowest in the last year or so. So that would actually be this 81.64. So you'd be under 100,000, but still a comfortable monthly income. So now let's look at. I'll actually look at the fund on Yahoo Finance, show you where I got the source data from. Now, Yahoo Finance can be wrong at sometimes, as a commenter pointed out to me yesterday, very astutely. The SVOL fund actually paid the dividend in June 2022, which Yahoo Finance, for whatever reason, skipped over. But in that case, in the future videos that I do on these, I'll probably just go to the site and show it directly. But for now, I'm just going to stick to Yahoo Finance, just because it's really the easiest thing to go to. But we can cross-check. If I see a dividend skipped, I can always cross-check it. So like I said, 53.85 as of close of market Friday, 53.89 after hours, which would open if the market was going to open at right now. This is what it would open at. And then if we look here, the peak of the fund, it was $63.19, December 27th, 2021. So it's fallen from there. Now, I had a commenter disagree with me because I said that I feel like the way I understand covered calls to work, and somebody, if you understand better than me, feel free, to comment and feel free to explain it to me, because the way I understand covered calls to work, if you see the dividends when they're higher in the months that the NASDAQ is down or whatever the underlying index is. When it's down, meaning that the premiums typically are expiring, the options that they're in are expiring worthless, which means you keep the whole premium. That's just my theory. I haven't really validated that or proven that anywhere, but my thought, because that's how I understand covered call premiums to work. If you're buying or if you're selling a covered call against stocks you already own, say you own Apple, say Apple's trading at $150 a share. If Apple drops to 125 and your strike price is 150, by the time it expires, you're going to keep all that money because the option expired worthless. Therefore, the premium that you collected from the person that you bought that from or that you sold that to and gave you the premium, it's going to expire worthless because it's not at the strike price. And if it was at the strike price, you'd get those shares called away from you. That's just a theory that happens to fit the facts, like Spock would say. And so let's look at historical data here, dividends. Now the expense ratio is cheaper on this one, 35 or 0.35. But this one, of all of our favorites that we talk about, this one's been around the longest, almost 3 years. In fact, we're coming close to the 3-year anniversary of this fund's inception. So what you'll see here to, kind of corroborate that theory, if you notice in November and December, NASDAQ was dropping. All the US markets were dropping. So what do you see? Higher dividend, higher dividend. If I'm wrong, I hope the same person watches that, explain to me how I'm wrong, but that's my theory. So you see 60 cents, 61 cents. The highest dividends come, just like July. If you were following, last June was abysmal for the market. So July, we got a higher dividend, right? When the market does better, like it did in January, we have a lower dividend. See? And just like when we were recovering in 2020, you'll notice here the dividends were lower. See, like when the market was really running up, like February 2021, for a case in point, that was one of the best months that I've ever seen in the stock market. In fact, if I could go back in time, I probably would have sold everything there because everything peaked out. That's when all the meme stocks, all the AMC, all the Wall Street bets, that's when it was in full force with all this stimulus money that had been injected into the economy. So that's my theory there with that. And you can see the dividends here from July 2020 all the way to present day. Going back to the summary page. Now, the percentage from what Yahoo Finance tells us is 11.49%. And that's over like a trailing 12 months. The range of the fund, we're at $55 January 13th. We were at a low of 51.32, 51.23. So this is a lot more expensive than the SVOL. In fact, it's more than double. So this one is not going to be as attractive because it's higher. Like if you have that kind of money, you're going to get more bang for the buck in terms of dividends with the SVOL. Let's see how we're doing here. Okay, same two live viewers. Okay, what else can we talk about here? Okay, 52-week range, close to what I just said. Net assets. Let's see. Okay, three live viewers. All right, that's what we want. Okay, so back to the spreadsheet. Let's see. Go. Okay, this is going to take a minute to come up, but just think about that example that I just covered there. Just let that kind of sink in. Now I'm going to validate what the actual dividend payout is for the past year or so. And this is not the right sheet. I need to go to the right one over here. Here we go. Got to zoom back in. This is a Google sheet that I'm using. Okay, 200%. These are from other videos I've done. Okay, so JEPI. Okay, so what we're going to do, we're going to look at $6.23, which is the trailing 12-month payout, divided by, what did we say it was, 53 and change, 53.89, 89. So it's close to what Yahoo said, 11.56%, which really that's phenomenal. And the other thing you could do, if you take $1 million, times it by the 11% payout, and guess what number you're going to come up with? You're going to come up with very close to our 115,000 payout here. In fact, it's about 115,605 and 86 cents. Now, the thing I also want to cover, because this is the other thing with dividend funds, say that the fund drops to $45 a share and you bought 18,556 shares. Say it drops to 45. So then you're going to lose like 165,000, but you're getting 100,000 a year. So remember, if you hold this over time and it fluctuates, there's going to be some offsetting. Now, the other thing, which I haven't talked about in a while, is if you were to do the DRIP program and actually reinvest these dividends, then you could start with $1 million and then say nothing changes. This is a very simple example. With your 11.5%, you'd have $1,115,000 in year one, and then year two. Oh, wait a second, this isn't going to work for me. How compound interest works. Year two, let's see if it picks up the pattern now. It does. How about that? Okay, so in year three, you see, if you don't touch this, then you start to make more money now. So if you wait like 3 years and then you decide, okay, now I want to take payout at 11.5%, assuming all else equal, assuming everything else stays the same, then look at that. Your payout's 159,000 or 13,000 a month. So if you had the time and ability, you could like invest, do the drip program, and let it make even more, to where in 2 or 3 more years you're looking at a raise of about $4,000 a month, which is really awesome. So that's how that works, and I haven't discussed that in other videos, but like I say, with the drip program, that can really enhance your returns. Let's do this here since we're talking about money. Let's put them all in dollar format. See, doesn't that look better with the dollar sign in front of it? So that's how that would work. 13,000 a month. I mean, you could do a lot with that. I mean, and you think about, ideally, all your debts are going to be paid off in retirement. All of your expenses are going to be low. So, I mean, you could have a lot of money. You could do whatever you want. Like you could travel around the world. I mean, whatever you've always wanted to do in life, you could be set on this. Now, for diversification, a lot of people want to do several of these. So you could even do some of this, some SVOL. And then like I've discussed before, I've discussed the JEPQ. That's probably my favorite one. And we're going to get into other ones that the fans like to talk about that I get in the comments section. So I'm going to try to just make this a series, like I say, because I was really blown away with the results I got on the one yesterday, especially for a Saturday. I mean, posting that on a Saturday and getting those kind of results, that was really phenomenal. Wow, 9 live viewers. I'm liking this. Anyone that's on here, feel free to comment. But Let's see. I've gone for about 15 minutes here. If anybody has any questions, I can keep it going for just a few more seconds. Uh-oh, just lost 3 of you. Um, I'll give it some time for comments, but really let this kind of sink in here, what I have on the screen. Um, that's pretty much all I had to discuss today. I'm going to try to get a daily one out. If you like that, please remember to like, comment, and subscribe. Even if you didn't, what is it? Also, like, comment, and subscribe, because of all the videos I posted on this channel, more than likely there's something on here that everybody can find that they like. So thanks so much for tuning in. Take care and have a good evening.